Good evening, guys. It's Saturday, April 15th. My name is Dave Coker, and this is Talking About Finance. 3, 2, 1, let's rock. This is, of course, the channel with videos, with discussions, with knowledge for those who wish to build wealth. We don't trade because we know we can't. We don't try to time the market because we know we can't. We accept objective, transparent, mathematical evidence that refutes the claims who suggest it's better to trade. It's better to time the markets than it is to enter the markets and simply stay put. We know their arguments are complete rubbish, and so we go long equities. We practice dollar cost averaging. We buy dividend-paying stocks for one reason and one reason alone: to collect the dividends, to reinvest that cash flow into more dividend-paying shares. It's that simple. It's that easy. And yet large numbers of people believe in trading. They believe in market timing. They believe the words of false prophets, of self-appointed gurus who suggest for a small fee, or sometimes a large fee, they can teach trading. They can teach market timing, all sorts of bogus techniques that have been disproven time and time again in research. Sure, we want to build wealth. Yes, we'd like to get rich, but we realize you can't get rich quickly. You need both time and patience to build wealth. And that is exactly why we invest in the stock market. So on that note, let's talk about finance. The S&P 500 closed up the week about 79 basis points. 5 sectors outperformed the S&P 500. Financials, energy, industrials, materials, and consumer discretionary. They're to the left of the black bar that represents the S&P 500. And 6 sectors underperformed the S&P 500. They're in red to the right of the black bar that represents the S&P 500. Sectors that underperformed: healthcare, communication services, consumer staples, information technology, utilities, and real estate. A good week overall. Any week we end up on the plus side is good, and 79 basis points is nothing to sneeze about. But keep in mind, on Friday we saw Q1 2023 earnings season opens. Although early indications are positive, things might get a little rough. I've been looking at the data, I've been looking at analysts' forecasts, and we're going to see overall fall in earnings. We finish in about 3 weeks' time, so hang in there. It's best to sit tight. As one of my first bosses on the trading desk said, plan your trade, then trade your plan. The VIX traded down to 17.07, closed last week at 18.40. We won't talk about the VIX too much this evening, but you all know by now I'm suspicious about its level considering equities overall and especially exogenous factors. The 10-year note closed the week at 3.52%. It's up about 20 basis points week on week, down about 40 basis points year to date. And just a reminder, the next FOMC meeting, the next meeting of the rate-setting body in the United States, is on May 2nd and 3rd, so roughly 2 weeks out. Oil closed the week at 82.65. It's up about 2.4% on the week, and now up about 3% year to date. So yesterday was Friday, and by now you know my routine. Yes, of course I bought Bitcoin, of course I bought Ripple. It was Friday morning. Am I right? It's just what we do on Friday morning. Just keep investing. That's what I do. That's what anyone who wishes to build wealth should do. Save anything you can. Small amounts, large amounts, it doesn't matter. Just save. And over the long term, you'll do well. So now let's talk about what me and my buddies talk about all week. It's just gossip about the markets. It's about gossip about the products. It's just gossip about the people. We are global Wall Street, and we are absolutely everywhere. We have our fingers in everything. We know everybody. On Wall Street, in the City of London, our network is pervasive. If we don't know somebody, we know somebody who knows somebody. We talk all week on a private Telegram channel. We talk about the markets. We talk about the events. We talk about the people. We talk about the profits, and yes, we talk about the losses. We talk about who's winning. We talk about who's losing. We talk about winning strategies. We talk about losing strategies. And this evening we got 7 slides for 7 days. So let's go. Now, this one, we started talking about this, and I let slip, and I shouldn't have mentioned this. I didn't know Bernie, but I was in social situations with him twice. My takeaway of Mr. Madoff is simply this. People deferred to him in a major way. Here's a story. I was in a restaurant in Jersey City once, and we're going back to the late 1980s. And it was a huge restaurant, a lot of Wall Streeters there, just over the river, cheaper to eat there. Still, a lot of banks had their premises, or their back office, I should say, over in Harborside, it was called at the time. And we're in this restaurant, about 400 people in this restaurant. It's a Friday night, a boisterous crowd, lots of yelling, lots of screaming, lots of drinking, people just getting on, celebrating wins, celebrating profits, drowning their losses in alcohol. And somebody walked in, this guy walked in with like 6 people, I think it was. And it was really amazing because it was like one of these Westerns, one of these movies. The silence started at the door as they walked in, as they moved through the crowd. The crowd parted. And as the crowd parted, people quieted and they started looking. And I didn't know. I was working for Dow Jones. It was my second year there. I thought, who's this guy? And then my friends told me, he sat down with his buddies, said, well, it's Bernie Madoff. And I studied it a little bit. I know they call him the monster of Wall Street, and people ask me when they realize I've got this connection, how come, Wall Street didn't crack down on him? He was a fixture, guys. He was there forever. So he bent the rules in his favor, and it was easy for him to do because he defined the rules. Really fascinating about this guy, the fact that he got away with it for so long. I haven't seen that before, this documentary. I'm not sure when it came out, but when my buddies made me aware of it on the channel, I'm definitely going to watch it, definitely going to check it out. And this is interesting. Of course, this is John Templeton, if you don't remember, if you don't recognize the gentleman. And if you haven't read his stuff, maybe you should get off YouTube and get off social media and read more finance books. And this is a really interesting bastardization of his well-known expression. Templeton said, bull markets are born on pessimism, grown on skepticism, mature on optimism, and die on euphoria. And have we really messed up that much? Is the system really that distorted that this is what it's all about? Born on pessimism, we can agree with that. Grown on zero interest rate policy, oh God, yeah, we lost 15 years, I don't know. Mature on meme stocks, I have no idea what he would make about a meme stock. And die on rising rates, well, yeah, that one we can agree on as well, because most bull markets are killed by the Fed raising interest rates. It's a very, very fascinating problem. But we don't worry so much about this stuff because we invest for dividends. And you know something? This is such a funny meme. I had half a heart. I don't like to do it, but I had half a heart to recreate it or edit it by putting, dividend investors, watching them fight. It's okay. I can hang with the index boys as well. I do like what they get up to. Value and growth. God, I don't know. If you buy and hold, maybe it'll work. It possibly will work. I'm not so sure otherwise. You really, really got to invest just for dividends. That is the single way to get rich for sure, although slowly. It's a really interesting problem. And when you think about how you invest, there's one thing that I don't do. And I totally refuse to do things on margin. This is off a Reddit site called Square Mile Bets. Of course, the Square Mile refers to the city of London. The Square Mile, one of London's 2 financial districts. Canary Wharf is the other one. And when I moved to the East End of London, I lived equidistant from both of them. I lived in a ghetto at the time. Bought a property down there. It's gone up in value explosively. Oh my God, because it's gentrified. But it was walking distance of Canary Wharf and walking distance of Square Mile. So they're ripping on the name Wall Street Bets, and they've got their group called Square Mile Bets. Hey, I like it. I really do. And yeah, I'm not sure if he can do this, but yeah, it's a wonderful thought, isn't it? Yeah, we should all be so lucky to be able to approach the wife so she could subsidize our losses. Although, if you invest for dividends, guys, just invest for dividends and don't be surprised if you don't lose money. Or if you do, any losses are modest and they're easily covered by your dividend cash flow. It's a really interesting thing. And we got in an argument about China. And I've got an open mind, even though I'm American, I've lived all over the world, and I've been outside the United States since 97. A lot of people in the U.S. still think America number one. And somebody started talking this rubbish about America number one, blah, blah, blah. And this was really fascinating when you start to see the world's largest car market. And of course, that is important. People that discount the importance of the car market are complete idiots. Because of course, there's lots of jobs created in the car market. There's lots of value created in the car market. And to have such a huge market that Americans are locking themselves out with their asinine war with China is just very disturbing. It's further evidence that my country has lost its way. We should be trying to engineer a win-win with China. Instead, we, meaning America, I don't identify that much as American anymore, but America is trying to engineer a win-lose, meaning America wins, China loses. They're used to doing that with our European, quote, allies, unquote. Go back and look at the history. They engineer win-lose, where America wins and Europe loses. Joe Biden's Inflation Reduction Act is the latest installment in that sordid, well, what I'm trying to say here, I'm running out of words, you know? Feel so strongly about it, right? Just this real bad policy that the United States has got. And we're starting to see the weakness in different sectors. America's trying to go it alone. It just ain't going to work. They're driving the depolarization. It's just really wild what's going on. But it doesn't matter for us. We tend to put our money in Bitcoin for many reasons. One of which is we've always got access to our funds. It's a well-known secret that when I lecture, I give away Bitcoin in some presentations. Gave away a bunch of Bitcoin this past week. I needed to capitalize the Bitcoin wallets on Sunday morning. I had put it off and I had to do it that day. I made the Bitcoin wallets and they're fairly labor intensive, but I had to fund them. I could do it on Sunday morning. I started about 5:30, 6 o'clock in the morning. I was done by 8 a.m. Sunday. What if I was trying to do this with wire transfers and all this garbage at banks, right? Or even BAC transfers. Of course, you can't do a BACS transfer or an ACH transfer to a Bitcoin wallet. But with Bitcoin, we do have control over our money, over our wealth. And it's really inspiring, guys. You should start to think about what Bitcoin is. Bitcoin is many things. Bitcoin is something that can really do a lot of good for mankind. I feel that very strongly. Many of my peers, my colleagues do as well. That's why we buy Bitcoin regularly. I've been buying Bitcoin since 2014, once a week. I rarely spend any Bitcoin. I did a little bit, just like I said last week, so I could fund some Bitcoin wallets for students. But we're not talking about a lot of Bitcoin, and I bought it and pushed it over immediately to the Bitcoin wallets for students. But start to think about what Bitcoin is. Start to think about what it can do for you, what it can do for society as a whole. And then you'll understand why governments are afraid of Bitcoin. Do yourself a favor. Buy some Bitcoin. Buy a little bit regularly. Doesn't have to be every week, or even if you buy it every week, you don't have to buy one Bitcoin. Buy a small amount of Bitcoin regularly. Once a week, twice a month, once a quarter. Doesn't matter. Do it regularly and forget about it. I am quite startled these days when I see Bitcoin go up or down $300 or $400 and I see the impact on my overall wealth. You start now, you'll be in the same position in 5 years. Buy some Bitcoin, guys. It's been wonderful chatting with you this evening. Once again, my name is Dave Coker. My game, as I almost said, is making money. Yes, and my friends call me the Money King. You can ask me anything. you have a great weekend. We've been to the restaurant for dinner, had a couple pints. Wife is downstairs talking to the father. We're going to be heading out to the club. Oh yeah, I got the urge to merge. Nothing like hardcore punk or rock music on a Saturday night. Don't even need alcohol. It's such a wonderful feeling. Oh, and this music's pretty fine too. If you ever visit, you'll notice the first thing that goes on at this house 24/7 is music. Take care, guys. You have a wonderful evening and a fantastic week coming up. We're all going to make a bucket of money. Take care.